Hello guys, so once again it's your boy Joshua OGH and you are welcome to my YouTube channel Joshua OGH. So today is Saturday, which is weekend, and I have reviewed all my trades I took during the trading days, which I would like to show them to you guys, my exact bias, my exact entry, and how it later ended up. If this is your first time on my YouTube channel, what I do is, my name is Joshua. I'm a forex day trader. I'm documenting my trades to become a profitable and a professional trader, which is this channel in all is a forex documentary channel. I also teach on forex basics on my strategy I use, which is the Akemi strategy and advanced SMC trader. Do well to like, subscribe, and most importantly turn on that notification bell so that you get notified whenever I upload another video like this again. Without further ado, I quickly go to the chart and I'll show you the exact trade I took during the week and how it later ended up. So let's go. The first trade I took was on USD and because I normally trade USD on Monday, according to my rules. This was a trade. You can see I was riding the momentum, this higher highs, higher low, higher highs, higher low, and until price gave my setup around this area right there. If I zoom out, you clearly see that this was the break of structure, though it was a weak break of structure. It wasn't that strong, but I had to look at price action very well. As you can see, this first rejection right there was the inducement, while this second rejection actually tells me something that yes, this second guy is going to go. I look at the bottom, which key level is actually sitting on below that my inducement level. It was this key level. I saw this v-shaped key level, but sadly I didn't actually put it at the key level, my entry at this key level. I was I don't want to miss the trade, so it was the first trading day of the week, so it can spoil my mood totally. So I put it on the fair value gap, and I was actually targeting a 1:8 ratio, which was this key level, this OC key level right here. As you can see, this OC key level, because I knew my anticipation was that price is going to take out this high and retrace before price with maybe keep on pushing to the upside. My bias on this trade was on the daily time frame. Price keep on giving us a bullish order flow until price came down with this huge bearish candle, taking liquidity from this guy right here and tapping into our resistance, resistance becoming support key level, which is our ROBS, before giving us a nice CRT candle. I'm really sorry if my chart is messy, so I cannot really explain things without drawing a lot of lines on the chart. Let's give us a nice CRT candle, which actually closed inside the previous daily candle low, which means rejection. So that was the bias for my daily time frame. On my second trade, if you can see, I saw a nice CRT candle right here, which is this CRT candle right here on this step index. Now I look at the left and I was like, where is this candle reacting from? Here is the candle reacting, for which I scrolled back and I saw that price is reacting from a fair value gap right here. Okay, no, not a fair value gap. Price was reacting from this last extreme order block on the fair value gap, which I was like, I anticipated price to pull up to this next supply zone right here, maybe before pulling to the downside. On the 2-hour time frame, if you can see, I saw the market shift around this area right here. So I marked this key level because if you notice on my entry model, if you already know my entry model, you can see the setup very well, where price gave us a break of structure, a little pullback, and another break of structure, which this low will be used as liquidity and price to tap into the next key level before pushing to the upside. Now this key level, because this was the higher time frame, it was my point of interest, so I was waiting for price to actually come down to my point of interest. If you look at my where my entry is, I try to take a quick sell on that entry. I saw price reacting from this key level and it still closed inside the previous 2 hour candle, which made me went to the 15 minutes, and I tried to pull to trade the pullback, which I successfully did. After price tap into that key level, it gave us a change of character right here, a fractal shift at this area right here. As you can see, this candlestick, this bearish candle give us a change of character. Now price went up there, taking liquidity once again from this candle. Okay, so price took liquidity from this candle, and it gave us a nice bearish break of structure, as you can see. So I target the next order block right there. So this was the other block I entered, and I target my next key level, which is I think it was a one is to I target 1:3.228 RR trades, because I was, it was a pullback and it was a risky trade. And I later, like, I was like, oh my gosh, price came down to this extreme level before it now start going to the upside, going to where we actually anticipated. I did not see my entry after price come to my point of interest, so I was done for that day. So it is what it is. Now the last pair I traded was GBP USD, which I actually almost lost all my profit I made during the week. This was the anticipation. I price is actually on a daily order block, so I was anticipating a sell. Coming to the 2 hour time frame, as you can see, this is the price action I saw. When you see price gave us this double top right here before coming to the downside, and went up, taking liquidity from this double top, tapping into the daily order block before giving us a change of character. But I did not actually see my entry on this zone right here until price take it out. So I kept on looking for entry, until price gave another change of character right here. As you can see, where it gave this where price gave this highs, this low, this highs, and it gave a change of character. So after the change of character, my point of interest was actually on this fair value gap right here, this fair value gap that led to this change of price shifting structure, which price actually medicated. And I went to the 15 minutes time frame to look for my entry. As you can see, I lost twice. And on the 15 minutes time frame, once again, if you know my entry model, you see price giving us this break, give us a little pullback and push down. Now the next key level was my entry, which was actually on this OC key level, but price came there and stopped me out. Now the reason for me to enter once again was that after price have taken liquidity, which is this rejection candle, signal sell for me, and it gave another shift instruction right here. So I was like, okay, this was the flip zone, this was the flip. After this liquidity, price came down, it gave a rejection candle once again. Okay, let me explain that for you again. After the liquidity have been taken from this OC key level zone, price came down, it gave a rejection candle but could not give us a higher highs any longer. It's now flip, giving us a change of character once again. So my second entry was this flip zone, which I actually ended up taking another loss once again. And it was a two loss for me on this particular day. After price, I've already, I was like, okay, I don't think price will be coming down once again. I don't think price will be coming down. So I changed my bias to buy. Which I actually got smashed in the ass. So excuse my language. So as you can see, price gave us a nice bullish break of structure, a strong momentum, and it came down a little bit before pushing to the upside. My entry was the next key level. At first it was going well, I almost missed the entry because I was at work. So luckily it retraced and it pushed up to a 1 reach to half, 1.5 reach to 1 ratio before smashing my SL once again. So the second entry I took was after this rejection, where price took liquidity from my second point of interest and tapping into a key level right here, a key level right here, and giving us a shift in structure. As you can see, it gave us this shift. This was the shift in structure once again. As you can see, it after the shift it pulled back, and it pulled up. Now my next key level was this OC key level right here, but price actually failed because the price action this week is kind of rough. It's kind of rough, and price does not actually respect my setup. So I was okay with it because I won. So I was okay. So now I lost. So I also be okay. The thing for me to do is to journal the trade and be okay with it and keep on learning. So it is what it is. It is what it is. I mean, you have seen the trade I took. There is no hiding. One thing why I'm sad is because I've not yet been using much live accounts. Sometimes if I have money, I'll deposit, but it's a little money. That's why if you watch my previous video I made, it was about me trying to save. I mean, saving towards my first $100 account, because as trading, there isn't anything about trading that is more central to our success and also more misunderstood than the concept of accepting the risk. So I have understand the risks, which is by accepting the trade or the outcome of a trade without fear or discomfort. I've got to that concept and I've understand the probability of trading, which I'm taking the risk to save up money for my first $100 account. It is what it is. I mean, I'm chasing consistency, trying to build up this consistency phase, and because if me as a person, if I can be consistent, definitely my trading account can grow consistently. I mean, it's not about trying to look for the perfect strategy, the perfect best risk management. If as a person I'm not consistent in my character or in my good behavior, definitely it will be so very difficult for me to become consistent in my trading capital, my trading career. As you can see, that's the trade for the week, though it's if not of good risk management, or trying to you know do things right, I would have lost those profit I made even on the first day. So I stayed out, I saw my entry and I took. So my job as a trader is to wait patiently for my entry setup to appear, and I execute without fear or hesitation, and I let the market do whatever it wants to do with um, itself. So I think this week price action was kind of rough, and well, it is what it is. This week we are still in profit, which is I think 6 RR profit, 7 RR profit. So 7% can be good. It's just that it depends on the capital. If someone is having $100 account, 7% is kind of $7. Yeah, if it's like $100,000 account, you all know it's 7K, which is very good. So you see, the problem is not about the capital. It's not about the percent, but it is the capital, because a percent, 1% on the small dollar account can be very discouraging, while in a big account it can be encouraging. So it is what it is. See you guys on my next video.